Test.
Meet Grammarly Go, your go-to solution for getting quality work done quickly.
Ready for the big pitch today, Remy? Oh yeah, you got this.
And ensuring peak productivity when you need it the most. Grammarly Go brings AI to every text box, helping you create thoughtful writing in a fraction of the time. You can instantly make emails shorter or longer and strike the right tone with ease, making your message friendlier, more confident, more persuasive, you name it. And with the ability to generate responses with just a click or a few bullet points, you can get email replies out in record time.
All right, test, test, test. Let's see what we got going on here. Nathan, what's happening? Lewis, what's up? Welcome back. Goat JG. Yeah, this is a little crazy today. It's a little crazy. Nobody said it was going to be easy. Nobody said these guys weren't going to fight for their life. I mean, if we were in that position, we'd probably do something crazy like this too. Absolutely. That tells you something. Stick to the truth of the matter. Well, 250. I actually purchased a couple shares myself in this range. Can it go lower? If 250 doesn't hold, I'm gonna start eyeing $1.60. Crazy as that sounds, I'm eyeing $1.60 if 250 does not hold. And I'll show you why in the charts in a little bit. I'm just getting myself situated here with the stream, making sure everybody has a chance to see what I have here on screen and everything, making sure my vocals are right and all that good stuff. You know what? It's one of those days. I'm just gonna let some actual music play because I'm not really with this drop. Yeah, I can't do none of that what do you call it? That royalty free music. I need some actual tunes. You know, beats make me feel good. It's my era right here. All right, let's see what we got pulled up here. We'll take a look at the chart, see what's happening. Pull up the 23 hour. I'm gonna remove. Let's go old school a little bit. If we were on a stream yesterday, we talked about where we were on this thing. I'm just gonna remove the indicators, get rid of all of those. Just use our simple lines. And as of right now, 250 needs to be the bounce point. And let me get rid of this for a minute. Make sure my music's coming through. 1 second, folks. All right. So this is the super macro chart here for AMC. This includes the daily chart, 23 hours, which includes the after hours moves as well, ever since the beginning of AMC's inception. And at this particular point, what we did here is we were rejected. We'll call it a rejection at the 853 mark. The trading range we had originally set, and we've been talking about for the last couple of days, was between the $8 and change mark and the bottom, which was the uprise, which is roughly around the $3.90 to about $4 mark. We went back up there, retested. They took the opportunity for it to be sold off, and now we are back inside the descending broadening wedge, which we broke briefly on that 1 hour, on that after hours move. Retested, we're about to run. They dropped us under. Came back, retested the inside of the descending broadening wedge. This is the yellow line here. And now they have actually forced us back into the wedge. So that midline of the descending broadening wedge has been the area where we constantly return back to. Underneath it, we get bigger moves up. We usually bounce off of it before next rise. So we're in a spot right now that's very key to start turning around. I need to see 250 hold for us to start making our way back upwards. If we break down, like I said before, I'm eyeing 160. That would be the midline of the super macro descending broadening wedge, which is the wedge that was created ever since AMC, just about when AMC was created or offered as a IPO on the New York Stock Exchange. So all of this basically would then lead to a potential breakdown to about the 160 range, which is all the way down here, in the midline of this larger descending broadening wedge, if 250 does not hold. So I'd be expecting it if we don't start turning around in just a few seconds here. Let's see here. Now you can see, just turning on a couple indicators. I'm going to move a little bit closer time frame wise. This is the 6 hour chart on the macro setup here. I'm going to get rid of some of the lines, some of the EMAs, some of the SMAs, just so we can see it a bit more clearly. But just want to do a double check to make sure my voice is coming through properly. You guys can hear me as I'm speaking here. I bought a ton of shares today, so I'm just watching this, man. This is critical. I mean, like I said earlier, if you don't think this is the panic button being pushed, I don't know what it looks like, what that would look like to you. But this is a panic button move, boy. They are looking to, in my opinion, they're getting set up to get out of this thing. Now, let's see here. If this 250 range does not hold, like I mentioned before, this is the order block setup. You can see the blues represent the sellers, greens represent buyers. I have nothing here on the 6 hour chart at this particular point, maybe a small slim sliver of a expectation. They have knocked us underneath our trading range and well below our spring area. My initial draw point for our trading range, I think if you guys were here yesterday, was between the 280 mark, 288 exactly, to $17.05. So at this point, being that they've dropped us well below this point, while the company's improving, while the company has a lot of different things going on that are in the positive range, they took it upon themselves here to drop it even lower. So this leads me to believe that there is a little bit of fear in the water, and they are looking to start to take the opportunity that they're in this position to start exiting their positions and flip long. Now, how long that process can take, I don't know. How much effect it can have on the share price in the short term, I can't say. At this particular point, we are kind of in a spot where we're in the twilight zone. These guys know technical analysis just like a lot of us know technical analysis, and they use that to their advantage at this point because they knew it was about to run, and we were right. However, they're using that to their advantage to try to shake as many people out as they possibly where there is no supply. I mean, this drop off, looking at volume, is on a decreasing. Yes, you had the high volume sell off yesterday, but the further sell off that we've gotten today is on decreasing volume. So we just broke the 250 mark here, which is going to get bad pretty quickly. So it's a potential that we can see. Like I mentioned before, I'm looking at 160 now. I don't have any levels here in terms of actual technical analysis. All I have is just the orders that are sitting here waiting to be filled. So breaking under 250 is a huge one. We could start to see that break down towards $1.60, which would be the top of this order block, and potentially lower, basically looking to double bottom off of the all-time lows on the stock, which is crazy. All-time lows in the stock would be right at that same order block, as you can see, $1.17. That would be a match, basically a triple bottom here on the all-time lows of the stock, looking for them to possibly get out. If they don't get out at that point, I don't know what else to say. At that point, that'll be crazy for a company that's improving fundamentally. So, like I said, we're in the twilight zone right now, but I'm expecting us to start to break. If we start breaking that 250 mark which we already did, that's where we're going. Again, first it'd be the midline test of the super macro descending broadening wedge, which is from the beginning of AMC's IPO. And then from there, if that does not bounce, we're looking at much lower to basically double bottom off of the all-time lows, which was the pre-January squeeze location. It hit 117 at pre-January, and then from there we got the squeeze up to, on this particular chart it shows $15, but at the time I believe it was about $25. So that's what we're looking at right now. So this, we mentioned this a couple times in a couple other videos, there are a lot of people that are sitting comfortably down there, that actually bought back here in June and had been green this whole time. Through all of this, through the entire last 3 years, they've been green. So what they're looking to do is test those people's resolve to see if they're really still in this thing for real. And they're going to come down there and start to attack them. Some may fold, some may not. Some people are just looking to buy and add to their positions, but we'll see. But at this particular point, that's what I'm eyeing. We're at 247, still more downside to go if we don't start bouncing. I purchased my shares today, 257, and also at 263. I may have been a little early, hoping for that midline bounce to happen, but it doesn't look like we got it. So we'll see. I'm willing to hold on to those, but I'm not day trading anything at this point. I've been watching these today. I'm still looking at other charts and whatnot, so we can go over other charts as anybody's still interested in taking a look at a couple things. But at this point, this is what we're working with. AMC looking to head down, while Ape, which I'll take a look at next, is now bouncing off an order block. It is. We talked about this yesterday. I'm not sure who was on. I think Nathan. I think you were on yesterday, and also John. I don't see John in here today, but I think we talked about breaking that midline on the smooth moving average at what price point was that? Let's see. It was at 208. It broke that 208, and this is where we are now. We're hitting the bottom of that order block. We have some orders left here, potentially going back down to test if we did break 180. So it looked like we're potentially going back to get toward the bottom of the trading range, which is possibly 175. Crazy enough. 175 may be on the table. And from there, we'll see what happens next. But off of no news, off of nothing, these types of moves have been preceded by court situations, court documents, lawsuit documents, settlement issues. We see drops like this, but never for no reason in particular. So the only reason, in my opinion, is that the reverse split has these guys shook, and they're ready to start to make their way out. So keep yourself safe on this thing. Watch your positions and invest accordingly, guys. It's getting real right now. All right, let's take a look and see. Let's see what you guys got up in here. Well, I'm buying both, Shadi. I'm buying both AMC and Ape, even though there's a difference in price. To me, in my opinion, they're both going the same place, same situation. So AMC, in my opinion, is the boss dog, so it's going to be where it stands. Ape, you can grab a couple as well, but I can do it for far cheaper. Why not? If it goes further down, I'll buy that too. But at this particular point, it really doesn't make a difference to me. But again, it's a choice to be made. Ape can come down lower. The only reason I look at Ape coming down lower is just because of where it stands in the chart. Let's see. Pretty much those are my expectations, JG. Nathan, they knew the reverse split and conversion was going to happen, so they waited for the final week to get AMC to the post split. Exactly. It's a timing issue, and it's definitely something that's based around fear right now. I don't want to call it fear, but more so they are in a position where they are now in a risky situation, keeping the stock where it is and it potentially going up higher while they have the opportunity now to get out for cheaper. So that's where we're at, in my opinion. Again, Ape right now is at the bottom of this bull channel. Myself and we did mention this yesterday, broke through that smooth moving average. It is now testing the bottom end of the bull channel, and in my opinion, this would be a good spot to potentially buy. If it does come lower, I'm looking at 170, which is the last point of support that was tested several times. It would be a break below this bull channel, and then we have to see what it does from there. If it breaks below 170, then I'd be looking at this thing as pretty bearish. Just from the chart perspective, I'd be looking at 130, 135. And as crazy as that sounds, maybe even 150, then 135, somewhere in that range. So we need to see 180 hold. If 180 does not hold, I'm looking at 170, and then from there 150 and 135 on Ape. So right now it's AMC and Ape are both in the do or die area. Ape on its bull channel, AMC on its midline of the descending broadening wedge. But this is crazy. I have my line set here for the reverse split. You can see it. Marked for Friday. And this is where they want to go. It's even lined up almost perfectly at 160 where the lines cross. Which is, again, this thinner dotted line is the descending broadening wedge off the macro, the super macro. And it's the cross of the date for conversion. So 160 is my target if we don't hold right here. We've already broken 250. So it's looking like, in my opinion, it's coming down further. Let me turn the mic on live on this thing here. 1 second. In case anybody on the group wants to chime in for whatever reasons. All right, anyways. Yeah, imagine if 8 goes 65 cents. Yep. It could be crazy. 175. Yeah, 175 on Ape is really possible, John. It'd be a spot to load up. I mean, on the schematics, it's got to hold at 180 right now. If it doesn't hold at 180, I'm starting to look down towards 170 and lower. I mean, it's not a lot of time left on the clock, so that whatever moves they're going to make, they got to do it now. And I mean, you can't fault them for it, but it sucks to see. Off of nothing, we're down what? Yesterday down 28%, today down another 20 some odd percent. That's almost a 50% drop off of nothing in one day, off of positive earnings and positive revenue streams and all these good things that are happening with the stock. That's got to tell you something. Yeah, I'm rocking this music today because I don't really care if they cut me off. This is what I want to hear. These are licensed tracks, but who cares? That's what I feel like hearing now. So, I haven't even looked at SPY. Yes, I've been watching AMC. I'm not even sure what SPY is up to right now. I know it was up there roughly around the 440 mark, but then I haven't really paid much attention after this because this is just definitely grabbed my attention today. I haven't done a day trade today just because of this. Well, I bought shares, but I usually keeping them out specifically for day trading, available on the account. And I saw this opportunity to buy, so I just bought, and that was that. Let's see here. So I basically knocked my my day trading account for the time being. I'd have to go on wire and if I need to grab some more, but I'll just let today be. Got to see what's happening on this thing. Yeah, it was aggressive, very aggressive. Like this is probably the most aggressive I've seen it to the downside. But like I said, they completely. If this ain't like I'm gonna zoom into my my chart here once again on AMC. If you guys are in options, hopefully you guys are protecting yourselves on those things because this is a shakeout beyond shakeout. My trading range, as we talked about yesterday, this white box. This is from the ape inception. From there, this is our total trading range, in my opinion. This is what it was. I have it set up to about 280. We did hit much lower than that, hitting the midline. If it doesn't hold here, like I said before, it gets crazy. But my general trading range, my main trading range was between roughly about 370 and $8.85. Yeah, if they try to push it now, that'll be one of the craziest parts of the squeeze. This is the part where it sucks. Now, this is the trading range that took place back in June. Pre-January squeeze. There was more of a quadruple bottom type setup. Very similar to what we had here. Actually, just almost identical, just smaller. But now it's a totally different. With this move down, we are totally in a new place now. This is deeper than what we saw back in pre-January, when the company was damn near bankrupt. So, like I said, we are officially in the twilight zone. As far as companies potentially starting to bid on this thing, it's a possibility. I mean, there's opportunists out there. You know, don't be surprised if we hear Amazon buying the company thing. We talked about this the other day as well. Amazon buying AMC out or something like that, and then we squeeze again. These are the types of things that they do. They're going to find a narrative to fulfill why they're doing what they're doing. We just haven't heard it yet. There's nothing that I hear out there right now that's supporting this kind of move. There's no news. We're now 41 days on the threshold list. That's insane. Absolutely insane. 41 days on the threshold list. You know, it's either somebody's complicit or somebody's just panicking. The panic button has been pushed officially, ladies and gentlemen. So, that's where we're at. But I bought more. I'm not playing options on this anymore at this point. I got on my last day AMC options on Friday. And I'm out at this point. Got to see what this is going to do from here. But right now we are under my trading range, but we are bouncing off the midline, where this midline has been tested on several occasions. 1, 2, 3, 4 as support several times back in June and so on. But it's been respected on a few different tests. The bottom side to the upside and so on. Yeah, I mean, JG. I mean, it's if anything is the We Are Here chart, it's right now. In my opinion, we were already there last week. But what they did, again, these guys understand how to do technical analysis, you know, beyond what we can understand. Obviously, they're also using computers and things like that. However, all we have is, you know, what we have. But this move should have been a secondary test, and then we should have been ready to go. That's the Wyckoff schematic. That's the accumulation schematic, number 1. It's called the Wyckoff accumulation schematic number 1, and that's the move we should have been seeing. But in order to stop it, they had to stop it, or else the stock would have went crazy. So in order for it to be stopped and then fulfill their narrative and fulfill what they need to do to accomplish not being in a negative situation as far as losses they can take, they pulled out all the stops and broke that pattern immediately because they know where it was going to go. And I was able to see it, and so were they. So they had to do what they needed to do to knock this thing back down. Yeah, GME I expected, Nathan. I've been talking about GME doing that parabolic arc style move now for a couple weeks. It's gonna go to $14. I mean, I saw that back when it was at $21. I'm like, hey, this thing is going to $14. I had calls originally when it was holding some strength, but GME is coming to 14, and before you know it, it'll be right back up at 40. It's gonna just be like a straight shot, in my opinion. AMC, I'm expecting to be a fast move, but GME is a problem. Even though, like I said, they're a company that I still don't understand fundamentally, but hey, it's just such a locked up float and so overly shorted that it can just do some damage. But Ape right now is looking like it's trying to bounce. So is AMC. They're just kind of hovering in this area. And man, what a crazy day. Yeah. But this is the layout. This is Ape. That's AMC. But we are right there. Actually, let me take a look at some other indicators real quick. Yeah, they got these in the basket. Let me turn some things off. Turn off those. Turn off the combo. And Antara, like they made money, but they're supposed to make money. That's their hedge fund or whatever they are. They're supposed to make money. They're gonna probably not laugh at the situation. They really probably don't even care, to be honest with you. I mean, as far as emotions concerned, these guys do this for a living. So to them, this is just another drop in the bucket to them. These guys are dealing with billions of dollars. A drop in the bucket to them, but they did make what 300-400% on selling off on Ape. So, but the only thing is that they didn't do it in one shot. That may have shocked the market or shocked the price of Ape at that point. But you know, they had a lot of shares. What, a few million, 10 million shares or something like that, something crazy. But if they would have dropped them all at once, we would have been a whole different situation at this point. But they dropped it over time. And for a hedge fund to make 400% return on investment, that's unreal. So they took advantage of an opportunity. I can't say whose opportunity it was, whether it was better an opportunity for the company or was it an opportunity for Antara Capital. They're all opportunists. But I think AMC wouldn't have done it unless they really, really needed money. From what I heard on the last earnings report, they only had a cash position of about 460 mil, which is insane. So that's roughly about what they only raised 480 something mil from the sale of Ape, or from the dilution of Ape. So that means AMC actually probably almost ran through all the capital. So they were really in a bad position. So I don't think they would have sold it unless they absolutely had to, or tried to sell it off unless they had to survive. And it's apparent. So they had to go and sell the Antara because they were the buying party. They were the ones that may have stepped up to the plate or whatever took place at that point. But AMC might have gone bankrupt if they didn't make that move, because they didn't have as much capital left over as we thought they did, because they were burning cash consistently quarter over quarter. So Nathan says AMC needs to do so big money retail buy shares with causes a price increase. Absolutely, Nathan. That's what they need to do. And they're specifically saying they're going to pay off debt, which is the short thesis. So if they sell at these higher prices on the shares, they're going to raise more capital faster. They have about 25 million shares available to dilute for an at the market offering. If they do that at a $30, $40 share price, I mean, I'm not sure. I doubt they're going to put 25 million shares all on the market at once. They're probably going to strategically place it 5 million here, maybe 10 million at a clip. But 10 million at a clip with a $30 share price is going to be massive. You can pay off $5 billion in no time if you drop 10 million shares. At that point, the company becomes fundamentally stronger. And then from there, what is the short thesis? The only issue is that we'd have a slower move to the upside possibly, but it would be an upside. It would be a continuous upside move as long as the rest of the market supports an upside move. As long as, when I say that, I mean we don't have a crash in the stock market. So yeah, they had to paint a chart. Oh, it looks like yeah, absolutely. If you look at that setup, that's a setup. That's an Adam and Eve setup, right? You got it, my man. That's a macro Adam and Eve. This is supposed to go. Very large Adam and Eve pattern. Sharp decline, up, accumulation style move, and then you go. You test the last point of support, bounce off of it, and you move up higher. And that's the setup we're in on the macro time frame on 8. And they can see it just the same way we can. But their only defense, this is why I kept talking about 222 and 265 being such major areas to break, because those that have officially completed that pattern would have been looking to get above 330 and then start looking to find support above 330, which is that setup I created a little while ago to start to push this way. However, they knew exactly when to block it, the same way they knew exactly when to block AMC in order to stop that movement. Because these both are bullish reversal structures. The descending broadening wedge, the Adam and Eve pattern, these are bullish reversal structures. And like I said, these guys know TA. They know Wyckoff. They know all of these things. They have computers running a forum 10 times faster or hundreds of times faster than we can. So, and not to mention, yes, Adam Aron is a Wall Street guy. That's how he made his bones originally. So he knows what he knows what he's doing. He's a human also. Don't forget that. So people make mistakes. But yeah, this is where it's at. This is where it's at right now. We're gonna see what happens with this, but we are in a crucial spot. We just need to hold here. The next buying target, I'm looking to buy at support. Right now, we're at the support location. Like I said, not advice, but we are at a support location at the bottom of this bull channel on the daily chart. Go back a little further. If it breaks here, my next target would be looking for 160. I have to see how it operates there. 170, excuse me. And if it doesn't hold at 170, then I'm expecting it to come down to 150 very quickly. So yeah, so you got a 160 price point. I'd be looking around that where in that location as well, see if anything is crossing back up. But that's where I'd be looking. If we don't start seeing a hold in this bull channel, we have not lost this bull channel until that sweep down we had all the way down to 66 cents in the after hours move when AMC ran. But we have not lost this bull channel once it was created since March 16th. We've been in this bull channel since March 16th. So that's several months, about 5 months in this upward moving style pattern here for several months now. So to lose that would be critical. Yeah, they don't want this thing to they don't want to see this thing down there. Yeah, Wade. So if you're as far as the chance to get down to 150, pretty much that's kind of what we're talking about. It's got to hold here at 180. If it doesn't go to 180, I'm watching 170. If 170 doesn't hold, I'm definitely watching 150. I think he's at work still. So let me just message Wade back. Guy, that's one of the guys in the group. So I know he works during the day. He works during the day and he trades while he's working. Gangster. Let's see. Yeah, these guys. Yeah, these guys have a lot of capital. I wouldn't be surprised if we start to see a run like the last minute. We just run like 100% on 8. You see 8 go to 360 by Friday. Because again, AMC reverse splits first, I believe, if I remember right. AMC reverse split first. 8 will still be available, and then 8 will do its reverse split a little bit after, before it's no longer trading on the New York Stock Exchange. And man, what a move down. Let me take a look at the weekly. These guys are vicious. I might have to go on on Twitter and make sure to do a mental health check on everybody, because I think a lot of people are losing it. Oh man. All right, let's take a look at the weekly time frame to see what we got here. I'm just gonna do one at a time because, yeah, from a technical standpoint, gotta look at this really clearly. Start with AMC. Look at the weekly chart, and that candle is nasty. Goodness, look at this candle. I'm looking at this candle, but then I'm looking at the volume. That is a nasty candle, but it's not catching up to. We'll see. We got it. What's only today? Tuesday. Yeah, it's still early in the week. I want to see it close out less than what this buying candle was the other last week on that run up back to $4. Yeah. So April stopped trading on the 25th. You got it. I would imagine some big players get set to go in. I mean, I think Zohan, you talked about possibly buyers looking to come in and step in to buy the company. I don't know. I don't even think they even want a piece of this thing anymore because it's a clown show. It's a clown show at this point. You know, I don't think people want to be associated, but who knows? You never know. Have volume above the moving average. When was the last time we saw volume that heavy in selling pressure? And what it looked like candle wise. Last time we had this selling pressure this much was back on April 3rd, the week of April 3rd, and we finished off with a major pushback up. I can't remember. It may have been an earnings report or something like that. I'm not sure what took place on April 3rd, but the last time we saw this heavy of a selling volume, it was met immediately with that same week anyways. It's a weekly chart now. Some heavy buying pressure pushed it right back up to give us this long wick reversal style pattern. From there, we saw continued upside all the way till we hit about $6.13, which is that magic number. I think we got halted at that point. I don't remember exactly, but we almost broke the descending broadening wedge. And then from there, we came all the way back down to where we bounced again for the second time, which completed the triple bottom off of this setup. Yeah, the selling candle is mean. And to see it with this much selling volume, where this move back in April was higher volume, or just as high a volume, or it should wind up being that by the time this selling volume closes this week. I'm imagining up to here. For this type of a response, I mean, if this doesn't finish as high as this, and I don't see this type of a response or push back up or buying pressure allowed to come in, you're gonna have to call BS on it. It looks synthetic. Exactly. It's an accumulative structure. Like, this is the buying candles always. Besides that one time, the buying candles always outweigh the selling. Besides the after hours move that took place to $8 and change. Okay, test. Just making sure the audio and everything is still coming through. All right, good stuff. All right, bear with me 1 second, guys. Yeah, as far as this whole barcoding situation we got going here on AMC, just pulling up the 5-minute real quick. Yeah, this downside is not over. We're still under 250. We retested 250. If we get a new low of day, like I said before, I'm eyeing 160 on AMC. Ape is looking like it wants to recover. There's my downside target next. If we break on 8, this green line, roughly about 177, would be the next downside target, followed by the yellow line down here, which is roughly 170, which we talked about earlier. I'm considering that the last point of support on that macro weekly chart we just looked at a few minutes ago. Hey, Stevie Steve. All right. In my opinion, AMC's not going bankrupt. AMC's not going anywhere. Just what it is. And these guys are facing the harsh reality. Right now, company much stronger. Much stronger fundamentally, in a better position than it was 2-3 years ago when we had the first run-ups. So yeah, it's gonna stick around. I still believe that the company will see all-time highs again, or the stock will see all-time highs again. This is just a matter of clearing the deck. These guys got to clear the deck before we start to see anything else happen. Just part of the game. I think we're now starting to head into a new phase overall on the market or on the stock. And we're seeing it happen for real, in real time. We're just watching it. It's a little shocking, a little jarring, but hey, revolutions are 9 times out of 10 never pretty. For things to change, sometimes it looks worse before it starts to look better. And if this ain't worse, I don't know what is. Oh man, still feeling good today. What can I say? Playing some real tunes. Forget what YouTube has to say. Man, what a perfect bounce. This is the 65-minute on Ape. I mean, it's a fantastically perfect bounce off of the top of the channel. Rejection came all the way down. Haven't moved these lines. Bounced right off of it. Everyone is watching. Who's watching this stock right now is watching this bull channel. They were also watching 222. So we're on point. This bull channel has to hold. It's a great reversal location. If it does not, like we mentioned earlier, it's coming down to 170, which would be the last point of support. Yep, NVIDIA earnings today. Big situation. They're estimating or mathing in a 10% move on NVIDIA. So NVIDIA can either come up and just like push the market right back into a bull scenario, or the market's going to 200. The SPY's going to 200. If NVIDIA fills that gap, it's over. That gap is just waiting to be filled. But all they got to do is meet expectations on earnings, and I think they'll be fine. They'll be fine for that push up. But if they miss it by any means, it's over. Oh, man, what a loss there on that smooth moving average on Ape. That was bad. That was the line, 208. Losing 208 was huge. Did not expect to see Ape do that move, especially with the arbitrage mentality still in play. But just gives me more reason to believe that something outside of the realm of normal stock market mechanics is at hand here. Let's see. Stevie C says apparently having broken sub 3 means that if PNF Wyckoff is now 24. Well, it can. Right now, our floor has changed, in my opinion, underneath this range. The way I was looking at it prior on, just going back, because again, once these merge back to each other, the more prevalent chart is going to be the AMC chart, which is the boss dog chart of this whole thing. So, in my opinion, we are now out of range. Until we get back above 280, we're out of range on this thing. So I would love to see it get back above 280 so we can then be in position to start to see our move up. I still would like to see $10 hit. It can be a potential location to hit $10, but we're so much further under that it's probably going to be $10 before you find a bounce and retest of around the $7 to $8 mark, and then start to build strength from there. But that would also, it may push the time frame back that I was looking for. I wanted this to start seeing this thing going towards, like I mentioned before, end of September, end of October. But with this huge move down, that definitely is probably going to be delayed. Unless we get a bounce back today, back above 288. I would love to see that. If we see 288 today or something like that, or we start seeing that, then okay, we'll start to talk about some other things. But at the moment, we're still under 250, which tells me it's a high possibility we're going down further. A throwback into a descending broadening wedge is a bad thing. The descending broadening wedge, again, is that reversal pattern of the bear market. The yellow and purple lines. If you fall into a descending, fall back into it, once you break it, it's a known thing for stocks to run hard. They may retrace and retest, and then they run even harder. In this case, every single time we tried to break that wedge, we've been halted multiple times. Almost broke it. Did break it in after hours. You saw how that response was met after breaking the descending broadening wedge, running all the way up to $8.79. Brought back into the wedge. Once this break back into the wedge came in from the 8 news, this is considered a wedge throwback, and that's a very, very bearish thing to do. So not only did they throw us back into the wedge that was created over the last several years, the last couple of years, but they also threw us back into the wedge on a super macro descending broadening wedge, which is this one that was created ever since AMC's IPO. So this line here, was darken that so it's easier to be seen. That's also a throwback. So we have 2 major throwbacks that happened here. The macro, super macro, and the macro. We are now sitting at the midline of the macro, and we're heading toward the midline of the super macro, which is again between 117 and 160. So, I mean, that's what the TA says at this point, which would basically just erase this. It would lower the floor for the move up. Maybe $10 would be the number at most, but could even be. I would hate for it to be lower than that. But we'll see. We got to see how fast it responds and how much of a bounce back, if these guys really take the opportunity down in these areas to start closing their positions, and they escape with they'll actually escape profitable. They wouldn't escape, because I'm sure they made a ton of money on the way down in this move from all of this time back after the run up to 77. I'm sure they made billions upon billions playing the downside on this move. Run ups, short back down, run up, short, but they've made a lot of money. People thinking that these guys are hurting, they're not. They are just playing the trend, and they're slowing it down and basically taking money out of retail's pocket slowly until they can't anymore. There's going to be a point where they'll be like, okay, we've done this for long enough. Let's switch up. Let's run it to the upside now. That will happen, but it could be a long and extended type of move, because this was long. In my opinion, they actually would probably want to run it up quicker and then repeat this process again. 3 years worth, 4 years worth of just downside move, just bleeding retail out, playing off of hype, get a run going, do it again, bleed them out, have them buying calls, take all their money, and so on. So I would be more inclined for this move to happen. This large run up, I'm inclined to see that anyways. This large run up and then a slow bleed down over time to retest. Again, I still believe that AMC will see all-time highs again, but it's just the way the market works. They play off of an emotional play, and they're taking people's money in the interim. Yeah, Nathan, I think there's a lot going to happen with that. You know, there's going to be supposed to be shares that are supposed to be delivered from the settlement that should be coming out from the ape settlement, and I expect a lot of people that are going to be having failures delivered on those as well. Where are they going to get these shares? The markets, the market makers, and hedge funds, they have to pay for that. Those shares have to be paid for. There's a reason that they're doing this. This heavy drop is because they got to provide these shares somewhere. They have to pay off this dividend. Technically, this is a dividend that's being paid out because of the settlement. And the responsible parties to pay for that are the short hedge funds. If there's nowhere to get those shares from, more failure delivers happen. So they're shorting this out of desperation, in my opinion. They have to. They have to shake some people out. Some people are afraid. They're going to sell. Now they can turn around, and whoever held on can get their dividends. or they have to make money on the way down. They need liquidity somewhere. It has to be created somehow. Play the shorts, play puts, find your money in order to buy the shares at the higher price when the higher price arrives to deliver it to the people that need them, the ones that are in position to receive the dividend that needs to be paid out. So it's a desperation game right now. I mean, these guys don't get, again, I say desperation, I'm saying it from the chart perspective, not because these guys are broken and, you know, or they're going bankrupt. I mean, it's a possibility, but I'm just talking about in terms of why things are happening the way they're happening. That dividend has to be paid, or those shares have to be paid out. It's just part of the game. So if you can do it cheaper while making money on the way down, they probably bought puts right at the top, drove this thing down 40%, and they walked away with a bag of money, ready to buy the shares that people get shaken out of down here and lower. They'll rack up on those shares, and you'll see the price of the stock start to run back up. If they're trying to cover and buy back big positions on the way back up, yeah, we'll see a run. And that may be the true real life spring. But at this point, if we're under 250, I think people are eyeing the double, triple, quadruple bottom here at 170. This is what it is. They're all involved at this point. They're all involved. They're watching each other's backs because they need a market to actually for them to continue to do this. So you got it at some point. You got to keep retail involved to a certain degree. So they don't want to lose retail to keep. They want to keep the game maker has to keep the game going. That's the point. No game, everything stops. It's like what's that? The movie Escape Room or something like that. No more game maker, no more game. No more play. No one else is playing. No one else benefits. They got to keep the game going somehow. You got it. Yep, that's almost on point there. So go on. Yeah, I got no trades going on right now. I'd have to go and make a transfer. I just bought a ton of shares today. Oh man. So I'd have to take a break and go see if I can go transfer some. Do a wire. See if I can get into a couple plays today, going into the end of the day. So many plays. And Schwab is doing some things. Looking at some of these banks, JP Morgan. But yeah, I was trying to catch that knife. I'm like, to get shares at this level, I'll hold a small bag for if it goes down into the ones. But man, actually, I probably go a little bit bigger on that bag. But yeah, AMC's gonna come down. These are what the buyers are waiting. Clear as day, $1 and change. Yeah, Bitcoin's got that big gap down there. How's Bitcoin doing on this whole thing? I know that HKD is starting to run. We bought some shares. A couple guys in the group, they bought a couple shares a little while back. Oh, that's not Bitcoin. Knowing something like this would start to happen, we talked about it. I think that's before you got in, Zogan. But we had Bitcoin is starting to dump. Bitcoin going to 25,000. If it doesn't hold here, it's going to 20. Now, this is just, again, looking at liquidity, looking at where the buyers are. If it doesn't hold here at 25,000, nice $5,000 drop is on its way. Right before AMC is getting ready to run. So you got to see 25,000 hold. But yeah, it'll get down there eventually. but it did lose a very major uptrend that it's been on for a long time. Not to mention, it broke the smooth moving average. We talked about that on a 3-day. That is a very bearish thing. So we'll see. And you see all these buyers waiting down here on Bitcoin. The heavier buyers on the 5-day chart are waiting around $8,000. So yeah, they're all waiting to purchase it right there. They got their orders in place, just waiting to catch the knife when it does knife, and it will at some point. Anybody else trading anything else today? Or we just all watching the AMC? Anybody looking at any chart? Let me take a look at HKD. HKD started running. I was just talking about that a second ago. Kind of got sidetracked on Bitcoin. HKD up 50%. Let's go. This is a sign. Last time HKD ran 2,000% in a day. It can happen again. Right now, my shares are up pretty nicely. I bought shares in the $6.70 range, so I'm up $1 on my shares. On a 2-hour, it's broken through the smooth moving average. No sellers here until 12 bucks. So HKD can go on a little bit of a run. A lot of bit of a run if it starts breaking through some of these key resistances. The 1 hour, if it gets past, if it gets past about $8, this thing is going to go. Yep, we finally up, man. We bought in the mid sixes. I'm around 670. I think we bought around the same time on HKD. So I think we should both be in the 670s. Yeah, it's a liquidity transfer about to happen here. These guys are getting ready. Somebody's getting ready. We bought back on July 10th, and it was just sitting there burning a hole. The cash was just sitting there just burning a hole in my pocket. It's finally starting to see some movement here. Yeah, that's part of the distortion campaign. You know, make it unclear on the TA guys. That's why I always say you gotta take it easy on these TA guys, because they really are in place to try to fool everyone. Not the TA guys, but the market makers and hedge funds. I mean, it's designed. This is the toughest stock on the market to track. You know, and the most accurate way to track this thing is based upon Wyckoff. That's the only thing you can do. There's Wyckoff and there's Fibonacci's. But those are the most accurate ways to really track the levels and then supports and resistance. That's all you can really do. Outside of that, Everything else is just manipulation if it moves anything other than that. That's how I've been able to nail so many specific targets. Simple as that. Specific numbers down to the penny in some cases. But you know, you can't forecast manipulation. That's all you can do. All you can do is play the charts, and that's what I try to stick to. But these guys are really crafty. I mean, people follow fractals, they follow whatever the case is. You know, that's one thing. That's one way of doing it. But I'm more about accuracy, precision. All right. Yep. Yeah, so the all Delta chart is going to show the 72 run. Man, how did HKD get up here? It was out of nowhere. You got a spike in volume, and then we're actually looking to surpass that move. Wow. That 2,000%. That was off nothing. No volume on that 2,000% move that it had. Zero. But the second run up, that was off of high volume, and we're about to match that right now. It ran to 60, 70 bucks. Yeah. So, I see, not financial advice. I see a crazy opportunity on HKD right now. Not financial advice. Be careful. It's already started. It's already up 50%. But I think we can probably see a move to about 60, 70 bucks easy. You know, but not financial advice right now. 53%. Goodness gracious. It's going to keep going. If it breaks, hold. I think I have to buy some more. Damn, but oh man, what can I do to speed this? I might have to take a break and go grab some. It's going to go, man. HKD could see 60 bucks, 70 bucks. Mark my words. But not financial advice. Please protect yourself. It's already up 50%. So
Shop signature collections of jackets, jewelry, artwork, furniture, rugs, and more, all from independent sellers. Etsy has it. For you. For all budgets. For any occasion. Shop Etsy.com today.
all right, guys. I'm gonna take a little break here. I might have to go get some funds real fast, transfer over, so I could buy some more HKD, while AMC just sits there and bleeds. Unfortunately, until it doesn't and starts running back towards $14 today. Knock on wood. But I'm gonna check back in with you guys in a little while. Probably going into closing. See how things are. But also follow me on Twitter, guys. Let's keep up to date with what I'm posting. If I see anything additional, anything new, I'll be posting on the Twitter feed. Like, comment, subscribe. I'll see you guys a little later. All right, peace.